Hello guys, and this is your market watch for Wednesday, June 6, 2018. So we're going to get the chart started right here. And what we're going to look at first is the silver price. And guess what, guys? What's this green spike shooting straight up to the sky today? Isn't that nice? We're up 23 cents on the day. And that's looking good. I'm not exactly sure yet. Today, I haven't stayed to find out what's actually causing this shoot up in price. But I don't think it's really the breakout. I think we might be heading up to the second range, the range between $17 and $17.20. Might be what this is. We'll have to wait and see later today if it doesn't fall again. Silver's the worst thing to go up and come back down again. Anyway, we're getting a little bit of a bounce today, and that's nice to see. Okay, so Bitcoin, we're not really getting any bounce. We're just doing what we've been doing for days in around 7,000, the middle 7,000s. 7,648 at Bitstamp right this moment. It's kind of boring right now, this price. Seriously, this price is boring. This price is kind of boring. We're kind of sitting there waiting for it. Do something, do anything, do something. Go up, go down. Don't just sit there at 7,500 bucks all this time, you know. Cryptocurrency market capitalizations, 37.8%, 345 billion. So the market cap has drifted upwards a little bit. We're seeing green numbers in most of the coins here. Litecoin's up 3.87%. You could have had them yesterday for 117. Today they're 122. So we're seeing a little bit of a move up in the coins. Same with Bitcoin. You could have had it for 73 or about 7,300. Today it's 76.50. So it's a few $100 gain if you bought one Bitcoin. You'd made several hundred bucks, you know. So anyway, we're all in the green. Binance coin has made some of the biggest move. Now, what in the heck Binance coin is, I'm not exactly sure. Some of these new coins come along. I wouldn't trust really to buy into these coins too much unless you're going to buy in and move out fast, you know. The coins you want to stick with, the coins you want to really hang on to, HODL coins, are probably the top dozen coins, the top 12 coins. Except for Ripple. I hate Ripple. Ripple can just drop off a cliff someplace. Anyway, Dow Jones Industrial Average, she's up 124 points on the day so far. But she's still, you can see this range it's riding in. Ever since that big precipitous drop we had back early this year on the 1st to 26th, it went all the way down to February 8th. It stopped on February 8th. And we had these big 1,000-point drops and 1,000-point days down. Ever since then, it's stabilized. The market stabilized. We see a stabilized market. The Fed stabilized the market right here with this move upwards. They stabilized the market. The market's been roughly stable ever since. But they're going to lose that instability if they continue with their policy of quantitative tightening. And I'll tell you exactly when they're going to lose that instability as soon as I'm done with the oil here. 65.16 is the oil price. She's down 36 cents on the day, or 0.5%. We can see oil kind of peaked up here at $72.48 for sweet light crude, and it's been dropping ever since. The oil price has been dropping. This is a fast drop too. It's a fast drop in oil price, and I don't think it's quite over yet. I think we could go down like a little bit more. I don't think we're going to go down seriously that much more, but maybe a little bit more. We might go down into this range back here of around what's this range back here running? I don't know, $62, $63, and then I think we're going to be bottomed out. I think that's it. Once it gets down around 62, 63, I think this is going to be done. And then we're going to start slowly making our way back up again. I don't think it's really going to go too much over 75. So we're running in a range with oil. Now we're going to take a look at the bond market. And this is the reason why the stock market's going to get in trouble again. is because these bond yields, specifically the 10-year, they're starting to bounce. Right now, they're starting to bounce. All the yields are going up today, and this is exactly what I expected. But this is a little bit soon. I don't really expect these yields to go up that much higher in the short term until the end of the month, until the Fed comes in and raises the bar. This is the month. Every 3 months, the Fed's going to raise the bar. The end of this month is the month they raise the bar. This is when the yields are going to start to pop again after they raise the bar. Everything's happening because of what the Fed's doing. And so at the end of this month, the Fed raises the bar $10 billion more. Then we're going to see a pop in these yields, and that's when we're going to see the U.S. 10-year go up to 3.25%, or awful close to it. I don't think the real trouble probably is not going to come in until the next 3-month period after that, when they raise it $10 billion more. They're thinking they're getting away with this or not, because this has a cumulative effect. And what that means is it builds up pressure. It would be just like an old lady who says, okay, I got a pressure cooker. I'm going to weld up the little hole that goes pss, pss, pss on the top of the pressure cooker, and I'm going to put water in it and everything, and I'm going to be able to get away with this. So she takes her pressure cooker, she puts her water inside, and she's got her hole sealed up. Maybe she puts a screw into the hole where the little thing that lets the pressure off is supposed to be. She puts a screw inside the hole, and then she just says, well, I can get away with this. And sure enough, when she starts boiling the water, she can hear the water boiling in there, and nothing's happening. The water's being held inside the pot, but it's cumulative effect of the water boiling and building up pressure. And that's the way in this market. This is a cumulative effect. They think they're getting away with it right now, but the pressure's building. I know what's going to happen. I know what's going to happen. It's a no-brainer. As they're drawing liquidity out, the more liquidity they're drawing out every month, and the more they're upping it, up in the bar. They're thinking they're getting away with it. They're not. The cumulative effect is building up. It's building up pressure within this thing, and she's going to blow, boys. She's going to blow. And how she's going to blow is these bond yields are going to shoot to the moon. And we've had a bit of bond buying that's taken some of the pressure off and made them feel really good about all this. These stupid bond buyers, these are stupid guys that are buying these bonds, because these bonds, they're gonna this is not over, and they think they bought in. They think they did good at buying it at a little bit higher prices than they are now, a little bit higher yields, and the yields have fell back. And they think, hey, you know what, we did good, we made money, patting each other on the back right now. Well, this is going to end badly for them. They're going to find out that they should have waited to buy. They should have waited to buy. But right now, they're still feeling pretty good about it. 93.49 on the U.S. dollar index. She's fell back a little bit. She's fallen today. The U.S. dollar index has fallen today. Now, you see this precipitous fall in the U.S. dollar index today? Take a look at this rally in silver today. You see the rally in silver? That's what's caused the rally in silver. But I don't think silver's really going that much of anywhere, because ultimately what we're going to see is the dollar is going to rebound. I've been expecting 96 on the U.S. dollar index when this crisis comes later this year. I've talked 96. I've said 96 is my mark all along for the U.S. or higher, but 96 at least on the U.S. dollar index. This is what's going to happen. Jim Willie, I got to admit, he had this pegged back a long, long time ago. I remember hearing him say, like 3 years ago, saying the dollar's going to go up and up and up and up and up and up, and then it's going to die. I can't tell you how many times I heard him say that. The dollar's going to go up, 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 and die. He had it pegged. He had it pegged. Honest to God, that's exactly what's going to happen. The dollar's going to go up and up and up and up and up, and then it's going to drop off a cliff when the Fed changes their monetary policy. And so everybody's going to get trapped in dollars. Dollar's the thing to have right now. The dollar is where to be right now, and it's going to be where to be until we're mid-crisis. Until we're right to the point where the Fed finally relents. Then you're not going to want to be in dollars. Suddenly, you're not going to want to be in dollars. Listen, thank you guys for listening to this market report. And we'll catch you tomorrow. Oh, well, wait. Yeah, we'll catch you tomorrow. Bye-bye for now.